Peter Reznicek from ShadowTrader.net, and this is the weekend edition. Today we're going to be talking about how this may be different, so to speak. And when I say this may be different, I mean that the market might actually go down next week. We had a trending day lower today. I'm speaking to you on Friday, February 21st, of course. And we had a trending day lower. And the question is, of course, are we going to get follow through? Because since about mid-January, for like the last 5 weeks or so, we haven't seen any follow through to the downside. Nothing on the downside has lasted more than like a day, or maybe a day and a half, or maybe a day, and then a gap down, and then upon the gap down, we rally hard right back into range, etc., etc. But there's about 5 or 6 things on the particular charts right now, specific nuances that I want to point out to you, that I think point to the fact that this time it may be different, that this market may actually have a little bit more room to the downside. So I want to really explore that with you in detail from a technical analysis perspective, talking about the S&P and the NASDAQ 100 and some of the things that unfolded on Friday that lead me to that conclusion. All right, without further ado, let's get into it. All right, so let's start with this S&P daily, and I'm going to show you some nuances here, and then I'm going to probably show you the same nuances or similar stuff in the NDX. It all kind of ties together, but the first thing that I want to talk about is the bearish engulfment. So this is called a bearish engulfment when you have one bar here and it's usually, it could just be one bar inside, but here you have kind of like multiple bars inside. So it's kind of engulfing all these bars here to the left of it. Usually a bearish engulfment is, it's all about the bar previous to it, but this I think is noteworthy just in terms of its size, right? It's a very large expansion of range. And it stands in very, very sharp contrast to candles that are before it. So think of it that way, even if it's not a true bearish engulfment. Now, what it is, however, is another term that I've given this, and that's called buyer's shut off. I call it either buyer's shut off or seller's shut off. And this is a shadow trader term that I coined a long time ago because it is very valuable for weekly options traders, basically for short-term options traders. And you can use this pattern on almost any time frame, but let's just talk about it here on daily. What a buyer's shut-off pattern is, basically, is when one bar, doesn't matter what color, but in this case it's red, takes back multiple bars here that are the opposing color. So you literally have 1, 2, 3, 4 green bars going up here, and one red bar takes them all away. That's called a buyer's shut off. And the reason we call it buyer's shut off is because buyers are essentially shut off, and what we do with it for weekly options is we take this area here and we deem it safe as anything can be, for call selling, right? So in any rally against the context of this bar, we're selling calls that are anywhere above this level. All right, so that's called the buyer's shut-off pattern. So that's kind of like nuance number 2 as to why this could go further. All right, nuance number 3 is a simple one that everybody should know, and that's the fact that you broke trend, right? It's short-term. It's only from this low here, but it's definitely a trend line break, obviously. Now, question is, do you have a longer-term one right here, right, off of these lows, right? We can draw from here. And using what we call the swing out method, meaning you swing it out to wherever the first place it touches, you note that we have a trend line break there too. So it's actually on a very short term and on a longer term. We do have a trend line break. And that's important. Obviously, anytime there's a trend line break, the odds of lower are there. Okay, next is going to be the fact that in one day, and this is relatively rare, we lost the 8 and the 21 together. Usually you would find support one or the other. Today was interesting because it lost them both, and that often doesn't happen, especially when they're relatively spread apart like this, that you would drill through, not find any support at the 8, which is almost always a short-term arrow, a short-term support level, and not find any support at the 21 either, right? We literally went right through the blue line as well. So that in and of itself is also interesting because remember, whenever you're below these key moving averages, now the whole world sees this, right? And there's some people that judge the market on the 8 in a very short term. Some people judge it on the 21. You have all sorts of people that use, 20, 50, 200, etc. It's all about your time frame. For me, it's about the 821 being a short-term trader, and now I look at the market as certainly less bullish, right? Because it's broken trend and it's below these two moving averages. Now, the last one that I want to point out is probably the most important one of all, and it's a concept that I call overhead supply. And overhead supply happens in a couple of different ways. Almost always, the traditional way that I look at overhead supply is that if there is some sort of a balance area, and then you move to the low end of that balance area or below it, everything that happened in that balance area is overhead supply. Beyond that, I feel that overhead supply is also a situation where you have multiple tests of a certain high that don't get taken, and you've got plenty of poor location longs banging up against that level. And as the market comes off from that level, it now has overhead supply from those buyers there at poor location up near the top of that range. And this market right here actually satisfies both of those in a way that I believe we're headed to, at least, or potentially below next week, to the low of a balance area. And also that there have been only incremental higher highs in this market since like mid-January. And that in and of itself, I think, is going to bring out sellers because they're disappointed. They never really got paid. So what do I mean by that? Just on the incremental highs, notice that this is a high and this is a high. And this high is much higher. So that's not an incremental high. That's a real high. So all these longs here, we can put a little smiley face, they got paid. And the same thing happens if you go backwards in the chart. You'll see that over and over. But you don't see that as much here because, for instance, on this breakout level to new highs, it went a little bit higher and then fell back down into range. But here's where things really get interesting, right? Because this is still probably a higher high that's okay. And then you have this whole balancy area. And here, when you start to move up, do you actually make a higher high? The answer is sort of, but not really, right? This is only incremental. And then this high is actually slightly lower. And then here, when you actually make the high, you have to ask yourself, how much higher is this than this? And how much higher is this than this? And how much higher is it than this? And my answer is not a lot. And if it's not a lot, then what happens is that psychologically, you've got players here who are constantly piling in long, many of them with poor location, and they're not getting paid. And when people don't get paid on the long side, they switch sides, right? They're gonna get rid of these longs. And I think that's what we saw today, because prior to today, it still made sense, I think, if you just take out this bar, it still made sense to be holding on to longs, given how the market was acting right into yesterday, especially since yesterday was a reversal here off of the lows. That tells you a lot, right? It still made sense to be kind of positioned long, but now not so much. So there's overhead supply, I think, from the fact that these highs are incremental. And then as I was saying, the other way to look at that is that if you move below a balance area, then you also have overhead supply. And what I'm thinking is that this is essentially a balance area. If you look at this area, the market didn't really go anywhere. And a balance area is generally defined by equal highs and equal lows. And you can't really say that too much on the downside, but look at where the market topped out here all these times. And then, as I was saying, in terms of the incremental highs, once it broke out, it was a very weak breakout and went right back to that level. And then you have the overhead supply of what? You have the overhead supply of these buyers. And now what I'm saying is that if you move to here, you've got the overhead supply of this whole range here, right? This whole thing is going to be overhead supply. And that could easily make us move lower, all right? So keep all of that in mind. Those are the 5 factors that I feel can make the market move lower. And before we get off this TA, I want to look at the NDX because it's slightly different. But it does also have a lot of the same characteristics in that this is a high, this is a lower high. And this high here, notice that it's 22,222. So they mark that on the chart because it is a high. Well, what's this high? That high is 22,133. So you're talking about 90 points roughly, which is nothing in the NDX. So it's once again, it's that incremental high action, all right? As far as trend lines are concerned, let's just put it on. Clear this up a little bit. So I would say start from here, right? And swing it out to wherever it goes. You've got that. And then you've got this. So the secondary one, which is closer, is broken. But that primary one, where we did the same thing with the S&P, is not. And you can look at this two ways. The NASDAQ is definitely slightly stronger than the S&P, but I believe that it also has further to fall. You can look at it both ways. I think that the NDX is probably going to come down to this trend line here, which is the 21,440 area, okay? So keep all of that in mind as you navigate next week, is that we don't know exactly what's going to happen. There's no way of knowing if it will or if it won't. And when I get into sectors a little bit in a further segment of this program, you'll see that it's still, even today on Friday, wasn't a full-on, 11 sectors down day. There was still some sector rotation. And as I always keep saying over and over, when it's really bearish, there won't be any place to hide. All sectors will be down from the open, preferably more than 0.5%, etc. But we still didn't have that. There was still sector rotation today. So, I'm kind of cautious. I've been relatively cautious in this market for quite a while, and I remain relatively cautious in this market. And just remember that caution in the market goes in both directions. You can be cautiously bullish, and you can also be cautiously bearish. So even though I'm seeing all of these things, I think the potential is there that this time it's different, that maybe we actually go down more than one day. I'm still using caution. All right, let's take a moment and talk about market internals here. So this is my internal screen. I call it the sidebar because I usually have it on a side monitor that's flipped this way to have a portrait orientation, which I like better. So obviously this looks a little bit scrunched in this landscape presentation, but it's better, I think, on when it's in a portrait, when you have the monitor turned. But what we're really looking at here is this here, which is the breadth in the NYSE. This is the relationship between the up volume and the down volume on the NYSE. You can see it was 3-to-1 negative. That's pretty strong. That's a decent read. Anything over like 2.5 is decent. And you can see the NASDAQ is 2.5 right here, 2.46. So these are pretty good reads to the downside. And the advancers were losing to decliners by a margin of 1313. This is all Friday. And in the NASDAQ, it was 2,000. And anytime that the advanced decline line on either side passes 2,000, positive or negative, it is noteworthy. So keep that in mind. Now, digging a little bit deeper, I briefly mentioned in the last segment about sector rotation. And that sector rotation is still present here, you can see, because these boxes here are measured from the open. And lo and behold, even today, money was going out of tech and financials, etc., and it was going into healthcare, and it was also going into consumer staples, which is very, very interesting. And you can see how much some of these other sectors were down. I mean, 3% in tech, consumer discretionary, almost 3% as well, industrials 2.3. These were big declines off the open. And yet, you definitely had some rotation in because, especially staples here, up over 1% on the day. So this is why I was saying that the caution is still warranted out there, because it's still not that all-out bearish situation. And before I get off this, I'll just leave you with how this looked on Thursday, because Thursday was interesting, right? Thursday, you know that we turned around and we kind of closed strong, as I was pointing out in the charts. And look at just how rotation-ish it was. There's so much more dark green on this screen here. This is a snapshot of what the sectors look like at Thursday's close. All these advances and declines from the open. Notice that, here the Infotech was just pink. That means that the percentage loss was less than 0.5% if it's pink. Financials did get kind of smacked up a bit on Thursday. They were down 1.40, but look at how many sectors were dark green. There's 4 sectors dark green, which of course means the opposite of the red, which means it is up higher than 0.5% from the open. And that kind of tells you that there was definitely some rotation into there. And again, healthcare was one of the stronger sectors, as was staples. It's interesting that both of these were strong back-to-back 2 days in a row, right? So keep all this in mind. And the main takeaway, as I always say, is when you see a day that all 11 are dark red like this, every single one of them, then you will know that the selling is somewhat stronger, because there is literally no place to hide, quote unquote, and they are selling all sectors together. All right, let's do a little sector spotlight here. I'm going to talk about basically 3 sectors, the ones that you can expect. It's going to be tech and healthcare and staples, obviously, but I wanted to really start on this tech because I wanted to talk a little bit about that concept of overhead supply. And I want you to think back to what we talked about in the NDX in the beginning of the program, talking about how equal highs and failure to breach those highs often causes overhead supply in the market because you have lots of people who have poor location at the highs. And this is the most important sector, obviously, in the S&P because it's an entire third of the market. And we've seen this over and over and over, that how technology goes, the S&P generally goes. And if you want to talk about like failure to break out, I mean, it can't get any more glaring than this. Like, look at these tops. And this is on a daily chart. I'll just draw a little hash marks here. 1, 2, on every day that tests. 3, 4, 5. This one's a little lower, so we won't count it. I would say this one counts. 6, 7, 8. I'd say all of those count. 9, 10. Look at this. In 10 sessions, tech was trying to break through this level, and it could not break through. And so, again, where is the overhead supply? The overhead supply is here, right? There have to be people here at poor location. If they weren't there, they wouldn't have bulled prices up to these levels. So that concept of overhead supply is here, and we could see technology much lower. And notice that these lows here are kind of equal, right? This is the DeepSeek low, and then you have the tariff low in here. And this one is the, the CPI low, right? When you had the consumer price index that the market didn't like. So all these lows are equal, and that's also very, very noteworthy. I don't know if tech could slide that much, but imagine if it does slide to here. What do you think is going to happen, knowing that we've been here 3 times before already, right? You could see a further move lower. So keep that in mind as well. All right, let's take a look at that healthcare and that staples, just to show you just how strong this was. Remember, those measurements are from the open, so you can see obviously that it closed lower here on Friday, but we measure from the open because that's what really matters most. So it's holding up pretty well. And if this maintains this way, you know, if you get a market that kind of turns around at some point and goes higher, this may be where longs are going to get more active. And then staples also is very, very interesting, very, very strong, just completely bucking the trend. And so I would look at this as like a market in terms of a sector here, a sector that is basically on the move to the upside in the face of a very, very bearish tape. And again, until you see some selling, for instance, like come into sectors like this, then there may be, you know, some choppy action to the downside. And this is actually maybe even a downtrend line break. It's actually right there on the XLP. So when I see something like that, if it was a more bullish tape, what would I be thinking? I would be thinking buy the first pullback, right? I was thinking anywhere in here, these are buys, because even if you don't break through right away, you'll probably come down a bit, retest, and then prices will be higher. So keep that in mind as well. All right, last but certainly not least, let's do a little looking ahead, just looking at the key economic data that is of high impact that's going to move the market, and a small smattering of earnings. There's obviously lots more than this, but as I always say, only the ones that I'm really interested in, that I think have some potential to move the market and or could just be playable, you know, good trades, basically like some big tech stuff, etc. Monday is Realty Income. This is definitely not really a market mover, but this is ticker O, and this is a stock that I've recommended to subscribers for quite a long time. It's the monthly dividend paying stock. I've always liked it. I feel it's a buy basically on any pullback, so I'm just kind of pointing it out that they will be reporting on Monday. Again, the ticker is O for Realty Income. Tuesday is going to be consumer confidence, which is a biggie. Home Depot is also reporting on Tuesday, and that's important. Could be like a bellwether for the economy, consumer demand, things like that. Very, very important. New home sales on Wednesday. Salesforce.com, which is a CRM, and of course the granddaddy here of the AI space and all thing chips, etc. NVIDIA is going to report on Wednesday. That's super important. Obviously, that is going to have a big effect on the NASDAQ and can also have effect on the S&P. And so this is one to watch. This is going to be in the PM. So that's on Wednesday evening after the market close. Right? Thursday brings us the usual employment data. Also, Dell is going to report. Could be important as well in the hardware space. And then we got PC prices on Friday. So still, you know, if you take some of these earnings into it, especially NVIDIA, it's actually going to be a pretty active week, right? I think the main focus that the market's going to have is probably more than likely is going to be on Home Depot and NVIDIA, more than likely, right? So, but any of this stuff may or may not be tradable, and just be aware that these events are out there and be careful. And that's all for this week. Thank you so much for spending just a little bit of your weekend with me. So to recap what we discussed in this video, there is potential that, quote unquote, this time it's different, in that this market may get a little bit of downside follow through because of the 5 different things that I showed you, not the least of which is the concept of overhead supply, because of those relatively equal highs, and if we move below the low of that balancy area that I was showing you. So a couple of big earnings still also on tap. Remember, you've got Nvidia, you've got Salesforce, Dell, Home Depot, along with the usual economic data. So all of that may come into play. I think that Nvidia, as I was saying, is probably going to be the biggest driver in terms of moving the market next week. So wait for that on Wednesday after the close. All right. If you can, please hit the like and subscribe button down below. Also the little bell icon to be notified whenever Shadow Trader posts new videos. And as always, coming at you here from beautiful Los Angeles, California, I wish you good trading and good night.